The market is becoming favorable to buyers at an accelerating rate. That is a direct quote from the Cromford Report. So, what's going on? Could we potentially see home prices coming down? And how long is it going to be until we start to see that? We're going to talk about that today. So, let's get into it. We're just going to start with the Cromford Report because I know that's what many of you guys want to see, and that is the best way to explain what's going on right now. So we've got the Cromford Market Index, and this is an index that they've created that really tells us supply and demand in the market, therefore tells us where prices are expected to go. And right now, they're sitting at 146.6. What does that mean? Anything over 110 is a seller's market, and anything below 90 is a buyer's market. And between 90 to 110, that's considered balance. So we've got our demand index at 75.3. So demand is about 25% below normal because they consider that 100 range to be that balanced normal range. And then we've got supply at 51.4, which is about 49% below normal. So going back to this 146, it's over 110. That means it's a seller's market. So why are we even talking about a buyer's market? Well, because this is what's going on right now. That is clearly a downward trend. And we're continuing to see this. And you can even notice that the gaps between these dots are a little bit wider here than they were up here. And what does that mean? That means it's moving downward at an accelerated pace, faster than it was earlier this year in June, July, when we started to see that trend downward. Now, the situation remains that supply is lower than demand. So that means we're still in this seller's market, technically. But the way we're going right now and where we're heading, it is very possible that we will be in a balanced market and possibly a buyer's market eventually. There are some cities that are already seeing this quicker than other cities. So which cities are those? We've got these down here. Queen Creek, 95.5. That's technically a balanced market, but it's getting pretty close to being in that buyer's market stage. Maricopa and Goodyear also below 100, but they haven't crossed that 90 mark to get down to a buyer's market. Then we have Buckeye and Surprise. Those are kind of that low 100 range. Buckeye still being balanced, Surprise technically being a seller's market. And then everything from Tempe up to Chandler is truly a seller's market, but you can see there's some pretty big numbers here in terms of the change that these the CMI for each city has seen month over month. Now, Chandler, you'll note they've been leading the pack for a while. They're at 305 last month for their CMI and 226 this month. That's a pretty big change. I mean, obviously it's 26%, but that's a pretty big change month over month. They've been the strongest seller's market. And again, anything over 110, and this is 305. So that was a pretty strong seller's market. Still is at 226, but they're certainly losing ground. So if you are someone in the Chandler area considering selling your home, you may want to take that into consideration because you are losing your advantage week by week at this point. And buyers, if you want to buy in Chandler, get ready. You might be able to have a better opportunity here sooner than later. So there's only two cities that have moved in a direction favorable for sellers, and that means that's the ones with the green arrows. So Cave Creek and Tempe are the two that we saw month over month move in a favorable direction for sellers. And weeks ago, you might remember, all of this was green arrows or most of it. Now we have pretty much all red arrows. So we're heading in that downward direction. When we look at the change month over month on average, looking at all of these cities, there was a change of negative 7.8%. And last week when I reported on this, it was a change of negative 5.9%. And prior to that, it was a smaller number yet. So we're seeing that acceleration. We're seeing the downward trend with all of these cities. And like I mentioned, when we look at this graph, we're seeing the dots between these two be wider and wider, which means that we're seeing, faster acceleration downward. So that's where we're sitting right now. We've got 13 out of the 17 cities in sellers markets, but there's a few that are right around that 100 range and starting to go closer to 90, which means they'll move into buyers markets. So we're going to have to keep an eye out on that Queen Creek, Maricopa, Goodyear, all of those towards the bottom there, and see if they will dip into that buyers market territory anytime soon. If you're a buyer out there licking your chops, ready to go, check the description below. I do have a link to search my MLS for homes for sale. And if you're a seller and wanting to know what your instant home value is looking like right now, I've got a link for that too. So check out the description. What happened in the economy? Well, last week the Fed did not hike the interest rate, and that wasn't much of a surprise. We all knew that that was likely what was going to happen. But what did happen is they said that rates will likely have to stay higher for longer, and markets didn't really love that. So the reason we care about this is because it impacts mortgage rates, and mortgage rates impact demand. And so if you're a seller, you should pay attention to mortgage rates as well. So with what the Fed said last week, it did impact mortgage rates. We also got strong jobs report information. We saw that the jobless claims actually went down by about 20,000 from the week before, 11% lower than the forecast. And that also was not good news for mortgage rates. So where are we at today? We're sitting at a new multi-decade high. Congratulations. So why is this important? Because if you're a buyer, this really affects your affordability. They're saying that for the average lender, top tier 30-year fixed rate is now over 7.5%. That's the first time in at least 22 years. And if you're a seller, this is really affecting the demand out there. This makes you start to think, am I going to get offers? Can anyone afford my house at this price? And if not, what are some concessions that I can give, or should I be considering a price decline? So as a seller, you do want to pay attention to the mortgage industry and these rates as well, because it is really what will affect the traffic that you're seeing if you're not priced right from the start. This week in the economy, we are going to get the PCE information, which is the personal consumption expenditure. And so that will be interesting to see where we land with inflation there. That can also impact what the Fed decides to do next month. So keep an eye out for all of that information this week. I know I've talked a lot about the resale home market in this video, but if you want more information about new home sales and what's going on in new construction, check out this video right here. Thanks for joining me on this Tuesday, you guys. I'm Caitlin McKegg. I'll be back next week with another market update.